Good afternoon, everybody. Stan and Jack here, and we're doing Ask Us. And Ask Us is a subscriber-only webinar, and basically this is your chance to ask us questions. And so there's a questions tab on the GoToWebinar panel. I would encourage you guys to go ahead and start populating that while I kind of go through the disclaimer and stuff, so we can start with whatever your questions are. Let's see. So, all the webinars we do, they're for educational purposes only. We're not here to give trading signals. We're here to do education with you guys. So the questions for today, by the way, it could be a question about the service. It could be a question about the website, or even maybe we've had other people even ask questions in webinars like this, the Ask Us webinars. What's your take on ES right now, given that we just hit the support trend line? Okay, Jack and I were just talking about that. So, it could be something on an instrument, a specific instrument that you're sort of puzzled by, or it could be something about the service, or it could be something about trading. It could be something about risk management. So it's kind of an open floor for you guys to, to put questions up for us to deal with and for us to work through. And I think every one of these we do, Jack, I think I find them to be very valuable. Anything you want to add before we start?
No, I don't think so. Let's go.
Okay. First question, what is the keep Stan out of trouble chart indicating, as well as any clues from cycle charts? Okay. I can get cycle charts up and running. That'll take me a moment to do, but what I can do now is take you to the keep Stan out of trouble chart. So let me go to indicators. For those of you who are not familiar, this is a chart that I cover sometimes on weekends, and I talk about this a lot. This is the skew index. This is another important indicator on my stuff. Okay, this is the keep Stan out of trouble chart. Okay, now what I've developed here is basically the S&P advancers minus decliners, and all I do is over time I have historically tracked this, and I have this going back many years, and basically what I've determined is that there are certain levels that indicate certain things. Like, for example, down here at the bottom, minus 100 is typically where you see a turn. It's an extreme. And trading happens at extremes. The best trades, in my opinion, happen at extremes, not in the middle of a trade, for example, right? So, when I get down here to this red line, I get very interested in, what's going to happen, okay? And by the way, this red line, we did an extreme. I mean, talk about, remember the limit down day? Look at what happened here. I mean, and I want to tell you something. I have never seen that before. And I traded the market in 07, 08, 09. I was trading back then, and this did not happen then, okay? Now, I want to say something about the top line. The top line is 110, and basically what that is telling me like when the market is at another extreme, which is the bullish extreme, right? So this is a 13 EMA. The blue line is a 13 EMA of the S&P advancers minus decliners. Okay, so that's $ADSP on my system. On other systems, it's $ADSPD. Okay, and all I do here is I look for patterns. Okay, now a pattern that I notice a lot, and here it is here. There's typically a big impulse, and then there's a lower low in price, and then a higher low here on the S&P advancers minus decliners. No surprise, right? When you're putting in a low or you're putting in a high, the last leg up is always thinner, okay? So same thing here. Here's your third wave, which is your strong impulse, right? Your fifth wave, that's a divergence. That's kind of what it looks like, and you have fewer issues on the S&P 500 carrying the market higher. Okay, so that's kind of what's happened here. So I want you to notice this. Well, how can I say this? We have third wave divergence. Okay, we still have third wave divergence, and we still have third wave divergence. And what I would say here, and something that I do with this, is this: I draw a trend line. Trend lines are very valuable. When we cross that trend line, we are going to head lower. Okay, now at this point we haven't crossed this high yet. Okay, what I'm calling the fifth wave. Okay, we haven't crossed that yet in terms of the S&P advancers minus decliners. So, what I can say here about the rally is going up on air. Okay, there's not a lot of participation in this rally at this point. Okay, there was a lot of participation here. There was more participation here. Okay, back
I
in
think
March.
I heard, Stan, that the lowest volume day of the year so far was 2 days ago.
Yeah,
Don't know whether
exactly. Now, the thing you got to remember, just because it's low volume, does that mean we can't go higher? Guys, we can go higher. Okay, it doesn't, just because there's low volume, what that tells you is that you're in some kind of a divergence move here. You got a low, your last leg up is always the divergence, low volume move. And it strikes me that we're in that right now. I don't know how it strikes you, Jack, but that's sort of my take.
Yeah, I agree. Yep. It's going up. It's going up on fumes. We're looking around actively for the next short-term high.
Yeah, I agree.
It's gonna be soon. When exactly? Don't know. Could make a new high. I mean, today was a bit weak for the bulls. Their chances of actually beating out the old, getting to a new all-time high before the swing high is put in, reduced. But they did hold ES trendline support, so they're still in with a shot.
Yep. Okay, so I hope that answers the keep Stan out of trouble chart. Guys, if I were you, I'd set one of these up. These are it's a very valuable tool. It trends well, it charts well. I think recently we've had these spikes that have gone way beyond the minus 100, but typically in a trending market, a bullish market or bearish market, you get this 100, plus 110, minus 100. There's also the zero line, which comes into play, but also there's this line here, the pink line. I've noticed over time, it's minus 45. That tends to be an area where you see a fourth wave. You see the fourth wave there? Even this right here was a form of a fourth wave, okay? So you typically don't penetrate that area on a fourth wave. Once you penetrate this area, that means you're done with the impulse and you're in some form of correction, short-term or longer-term correction. So that's kind of it. Next question, Antonio. Do you look at the VIX as a confirmation / warning sign? Let's look at the VIX. Okay, I look at the VIX in a couple of ways. Here's the VIX on the S&P. The symbol is $VIX on my system. Okay, I have a system set up here that's a very valuable system for me. It's looking at the penetration of the lower Bollinger Band. Okay. You look for a penetration and close below the lower Bollinger Band, and I have my Bollinger Band set to 18.2. Okay, so when you get down to the lower Bollinger Band, typically you get a response off of it. Like, look at this: lower Bollinger Band, response off of it; lower Bollinger Band, response off of it. Okay, so and there's this way in which the VIX, it trends down beneath the simple 20-day moving average. Okay, in this particular case, simple 18-day moving average. Sorry, when I look at a Bollinger Band, I assume it's 20. But the other thing that's important with the VIX in my estimation is bandwidth. Okay, so I'm looking at an 18.2 bandwidth. Do you see the blue line? Okay, look at the blue line here. Okay, and what happens is when you get a real low reading in the VIX and a real compression of Bollinger Bands like this kind of pinch, it leads to an expansion of volatility. Okay, do you see the expansion of volatility here that followed from November? So November, we got this pinch, a pinch in the Bollinger Bands, and look at what happened here. We hit this this blue line here, which I'm trying to remember what this is. I think it's 20. Yeah, it's 20. So 20 on Bollinger Band with the VIX. When the VIX compresses and the VIX is low like this, it's a signal. It's a signal that there's an expansion of volatility coming. Okay, now I've traded different types of VIX instruments, and this is one of the things I look for. I don't try to get involved in the VIX in a VIX instrument playing it long unless I see a pinch like this and something low like this, and even a touch of the lower Bollinger Band. I mean, it's an excellent opportunity to get in. So a pinch like this leads to an expansion. This is more of a longer term indicator. It's not a short term indicator at all. So it's like it's predicting the next couple of months worth of movement. And so on the bullish side, there's that. On the bearish side, you get up around 30 or so. That's a fairly significant number in the VIX. And I look for a break of the middle Bollinger Band, and we tend to track it on the way down. And then you get this sideways consolidation move. So that's my way of looking at the VIX. I don't. How do I say this? I don't look at it as a warning sign ever. I look at it as an opportunity sign. Like here's an opportunity sign right here, right? Here's another opportunity sign right here. It just happened, okay, just a couple of weeks back, okay? So what this is telling me right here, this touch, and I could go back in history and show you other touches that are the same. Here's another one right here, okay? Back in 15th of July, hold on, yeah, 15th of July right here. It led to an expansion, okay? So, you know, again, low volatility with a Bollinger Band contraction is a signal on the VIX. So what this is signaling is that there's a coming expansion in the next couple of months, okay? So it may not, and by the way, this is more of a swing trading type approach to looking at the VIX. This is not something I would be doing as a day trader. These are one-day bars that you're looking at here, okay? So those are my comments on the VIX. Jack, any comments?
I rarely look at the VIX. I think I used to chart it quite a lot. I just wasn't getting an awful lot useful out of it. So and I hated trading VIX instruments.
Yeah, VIX instruments are very, very risky. Very risky.
They are really. They're, you know, if you want to get rid of a lot of your money and not have the bother of having children, you can buy VIX instruments instead. And, you know, same sort of effect.
Right. So, you see this blue line here? Okay, this blue line is a close below the lower Bollinger Band. Okay, I forget the name of this signal, but this is a signal that happens maybe twice a year or something. It's not very frequent, but when you get this signal on the VIX, a close below the lower Bollinger Band, it is a midterm signal that there's an expansion coming. Okay, and look at this one.
Having said that, what I would say is that VIX signal might be useful. The standard VIX signals that everyone watches, the VIX buy signals, the VIX sell signals, I actually went back quite a few years and concluded that the outcomes were essentially random.
Yeah, yeah. This one is fairly reliable. It's like 70% reliable, but this is a very rare signal. You see that? It's very rare. Okay, and it doesn't mean it'll happen immediately, but it means in the coming month or so. It's a midterm signal again, that an expansion. Look at the expansion, pretty big expansion, right? So anyway, so that's it on the VIX. Next question, Jack, you want to take this one?
Yep, sure. What is it?
When there are extensions higher, how do you see competing RSI signals like no divergence on daily, but divergence on 1 hour or 4 hour? For example, currently on NG.
Well, I think the reality is the different time frames tell you different stories on the different time frames. I mean, if you're looking at monthly signals, then you're looking, which I've watched quite a lot on things like US dollar and bonds. I use the occasional quarterly chart, but obviously you're not talking about anything immediate. What you're looking at really is the bigger trends. If you're looking at actually, this happens intraday sometimes. I call the 1 minute and 5 minute buy and sell signals on ES. Now, it can sometimes happen that we're on a 5 minute sell signal and I get a 1 minute buy signal fix. And it may well be that we will get a rally and then it will go down again. And that often that will happen. Equally, it may be that it'll get overridden. If I've got competing signals if I've got differing views from those, then it's a reason to be cautious. One thing I would say, though, do you mind if I just spend a minute on natural gas? Because actually something really interesting happened today, and I just want to show that.
Let me throw you the screen. I was just throwing up natural gas to show RSI. I want to make one point on RSI, but you go first. Go ahead.
All right. I just want to show you something that happened today, and I just want to make note of it because it's got big implications. And it's on the Nat Gas daily chart, and it's not about the RSI, it's about the level. Now, here we do have a daily RSI 5 sell signal brewing. Having said that, this particular, when you're looking at an embedded bull trend like this, you need to be very cautious about going against it. But what I also would say is this is, I was looking at this as a potential inverse head and shoulder neckline, and it was a potential inverse head and shoulder neckline. Look what happened today. We blew through both channel resistance and this resistance level with a lot of confidence. What does that mean? Well, it means that this isn't an IHS, but this is a double bottom, and we've just fixed the target. This is the RTH chart, obviously, but the target here would be at about 3.3 with the obvious resistance at about 3.1. I think there's a very significant possibility that the next retracement is going to be a backtest of this broken resistance, and then continuation upwards. This is a huge level, and we saw a conviction thrust up through it. Unless we see a big reversal tomorrow, this double bottom here is very much in play, and we could see that all of the gain in natural gas from the low up to the close yesterday, that would be the target. Doing that again would be the target of the double bottom. So I just wanted to mention that. This sort of RSI action isn't something you tend to short into unless you're the sort of person who buys fixed instruments. Not easily scared. These things can become embedded. I could show you the silver chart from, I think, what, it's 2011 or something, or was it 2008? But I mean, you know, these things can get embedded for a while, and they're really strong bull impulse. This may have just confirmed that it's going a lot higher, and isn't going to spend too long doing so. All right. Anyway, I just wanted to mention that on natural gas. I'll throw it back to you, mate.
Okay, great. Thank you, Jack. Okay, let's. I just want to make one quick point on RSI, because the question was on RSI. In certain instruments have a certain rhythm. Okay, and for example, if you swing trade and you trade on a 1 hour chart, okay, or you swing trade and you trade on a 4 hour chart, you're going to find that divergence on a 4 hour chart is more reliable than a 1 hour chart, in my opinion, for swing trading. So like a significant turn, okay, like this is a significant turn. This is a significant turn here. You're going to see divergence on a 4 hour. Now I'd have to go to the 1 hour to see what happened here, okay, but you're going to find that a 4 hour chart is more reliable for swing trading. And that just is something that you learn with experience. And I'm sorry, let me correct myself. That is for natural gas, okay? Different instruments have different levels of volatility, etc. So like, for example, if you're trading RBOB, okay, and also heat, okay, heating oil, they're much more volatile instruments, okay, and they're much thinner, okay? So, you know, looking at divergence on a 15-minute chart on something like that means absolutely nothing, okay? So you have to really just through experience and actually just tracking history, just go back in history, look at a 1 hour chart, look at a 4 hour chart. Daily divergence, as Jack mentioned, tells a completely different story. So, but if you're swing trading, a 4 hour chart's going to tell you a lot. If you're holding for more than 2 or 3 days, a 4 hour chart, in my opinion, is great for natural gas. For other more slowly moving instruments, a 1 hour chart is good for divergence. But to be honest with you, except for, you know, if you're going to trade divergence on a 1 minute, 5 minute, 15-minute chart, that is for much smaller moves, okay, and you just have to realize that. So, you know, it depends upon the type of trader you are, I guess. So that's what I wanted to say there.
One last thing I want to mention as well, and that is, on the Twitter feed, you may have noticed that I say that if there is a trend day happening, then I will stop calling any counter-trend signals because the chances are they will all fail.
Yeah.
That applies to any strong trend. Any strong trend. You can basically, 2013 was effectively a trend year.
Yeah, right.
You know, I mean, it's not just individual days. Any powerful trend on the time frames which are appropriate to that trend, it will just run over everything. Beautiful pattern setups, lovely topping setups, signals, you know, out the wazoo, you know, it can run over everything. And a very good example of that is natural gas, which actually just has had a huge amount of negative divergence almost since this latest move up started, and it's just blown all the way through. So yep. That is a powerful trend.
Yep, agreed. Okay, let's go to the next question. What is your opinion on SPX after today's trading? Jack, you want to take that one?
Yeah.
Okay. Let me pass you the screen. Hold on. Here we go. Okay. There's your screen.
Right, now there's a couple of things to mention on here. Now, one of them is that I can't show you the ES chart, so I'm just going to describe what's on the ES chart, and we'll take this red from there. This is the wedge I posted this morning on my blog. It's a 15-minute chart. You can see we have broken down through wedge support. We did exactly the same on RUT. Obviously, it was a bigger break, but then it was a, this has actually gone up 10% in this very narrow and very nice rising wedge. It overthrew at the high. We're going to see a high soon, but as you can see, RUT tends to move at a different speed. Look at the rally here. We broke down. The rally we saw this afternoon on SPX, where is it on RUT? It's not there. So you can't really, you can have a look. This may well retest the high here, but it won't necessarily retest it at the same speed. We've got a beautiful IHS here. That may well break up. What we were talking about was what are the prospects now that we've lost those two support trend lines of making a marginal new high, which I think would be the ideal technical point of view thing to do now. And I think the prospects are still reasonably good. The other thing we need to remember is price went down, touched the ES support trend line, and reversed there exactly today. Yeah, that trend line did not break, and it was not missed. It went there and it reversed there. As long as that trend line's holding, we've still got a shot at the high.
We tweeted that this morning. We said this morning, watch 2105, the trend line. If we break it, then we're done. We've turned. But we did not break that today. So my take is there's no confirmation at this point in time that the market has turned. No confirmation.
But if you look at this RUT chart here, left shoulder, head, right shoulder, this is setting up, it's not necessarily going to do it, but this is setting up a pattern to retest this high. Mm-hmm. That would be a normal thing to do after it broke down, but you can see whereas SPX actually recovered most of the losses today by the close, RUT didn't. That could mean that it's going to retest the highs on RUT while we're making a new all-time high on SPX. We don't know. It's just speculation, but as long as the support trend line on ES holds, then that's still very much in play. NDX, I'll just mention very quickly. NDX, I don't think I'm doubtful about this getting much higher. This is still forming the same topping pattern from the break of this rising wedge. Really, this is almost forgotten on SPX and RUT, but NDX has been stalled under this very strong resistance here at 4640, which is the island top resistance. I don't know what the significance of that is, but it's been holding there for quite a while now. It may well continue to hold. I don't think there's a lot further to run in SPX and RUT. If that's the case, then it might just be that NDX is going to trade sideways through it and then fail. We've got a beautiful double top here. It's just waiting to break down.
Okay, very good. Okay, let's go to the next question. Hold on a second, Jack. I'm just trying to move around my screen here a little bit. Okay, I had to move your chart out of the way. All right, the next question is, does the pattern on the S&P or across indexes in general so far this year suggesting that we are in primary 5 now in EW terms? And Danny, here's what I want to say. If we continue to get support in the market at this point in time, with the divergence that we have, the answer is yes, the divergence has to hold. I think we're in a 3-wave move higher, and I think that we could be putting in the 5th wave right here, right now. I can tell you this, I think that the low that we currently have on the S&Ps, which was back in January, okay? I think that low, which was, Jack, am I wrong? I think it was 1812 or so, something like that.
1810.
1810, yeah, okay. It was in that zone. I think that is a potential wave 4. Okay, now the thing that you don't know, and nobody knows this, okay, is when this market is going to turn. So we cannot just be blind and say, oh, we're going to 2200 or whatever. We have to look at the shorter term structure and actually, say where is support, where is resistance. So right now, like what Jack just said, 2105 on ES is support. We would expect the next area higher to be 2133. Now that's basically a double top. Could we turn there? Absolutely yes. Absolutely yes. There's also another option that we could go higher to 2161. Now if we see the higher area, I guarantee you, and even the 33 area, we see either one, we could turn from there and put in a significant lower move. I mean, I'm talking about a big back test back into the 1900s. So this is going to, the next move down is going to be a significant move down. But even if you see that, then we're going to see even a higher move higher. Okay, so this last wave up should be in 3. Okay, and so in my opinion, if this is the 5th wave, we're putting in A of 5 right now. Okay, and we're about to turn, we're about to put in B of 5, and then we're going to put in C of 5. Okay, and why am I saying that? Well, because we broke 2111. Okay, we broke 2111 on the S&Ps. So is there a possibility that the 4th wave is in? Yes, that's one possibility. There's another possibility that this is a B wave. Okay, so, and with the banks breaking down in Europe, you know, and this market going up on air, I got to tell you, that's also another possibility that we can't throw away that as a possible scenario. Okay, so
I want to mention one other possibility, Stan. I'd like your comment on. Is it possible that this is actually wave 5 of primary 3?
No, I don't believe so.
Okay. Good.
I don't believe so. That's not my take. My take is that primary 3, that the classic topping pattern was that contracting diagonal, Jack, back in May of 15, I think, when we ended that contracting diagonal. It just a gorgeous structure. Yeah. That's how a major structure like a 3rd wave would end on a daily basis. It's just a classic gorgeous structure. Now they take forever to form. They do. I mean, you remember, Jack, we were back then talking about this, and it was like, God, it took forever for it to happen, right? But and that's how a big major turn is put in. Okay, in my opinion. Okay, next question. Any potential changes coming on the website? One suggestion is to have one concise page that has all the educational videos listed in order to save space. The video thumbnail can be avoided to make it easy to glance through the list. Yeah, that's frankly, Jack, a pretty good idea. What do you think?
Yeah, that's not a bad idea.
Yep.
We can do that.
Yeah, I think that the site is now stable. I think we went through a period there. And by the way, everybody, thank you very much for being patient, because the first week we had, most of you were just fine, but then we had other people that used tablets that had problems and whatever. So we seem to have sorted through all of the problems except one using, what's that browser that's used on tablets sometimes? We have a browser that's used on tablets.
Safari, Chrome?
Chrome. On Chrome, for some reason, on tablets, people cannot see their account information. And for those of you who use tablets, there's a fix coming. There's a version of the shopping cart system that is now available that works on Chrome. So there's just a software compatibility thing. We're going to get that installed, and that should fix that problem. So that's the only outstanding problem I know of. I wanted to give the update on the website anyway, Jack. But to be honest, in terms of putting up a page with video thumbnails and stuff like that, we could certainly do that. I don't see any reason with that. Okay, next question. Can you please show a cycle chart for the S&P 500? I think I can do that, Jack. Can you throw me to screen for a sec?
Yep, sure, no worries.
Okay. I prefer the Dow as a cycle chart in general, okay? And let me just show you kind of what I'm looking at here. That was, hold on a second. Okay. Can you see that, Jack?
Yes.
Okay. So this is not current because I do all my cycle chart work on another system. This is actually the system I use to trade on. Okay, so I typically do all of my technical analysis on a separate system. That way the system I actually trade on is completely free of garbage and all kinds of viruses and whatever. So this is where we were in this low window. We were calling it higher, if you remember. Here is the high window, and by the way, we're in it right now. Okay, the high window here is 6.5. That's the center date. Okay, the end of the high window here is for the Dow is 6.15. So we are in this high window right now. Look at this window down here. Okay, this window down here, by the way, the thing about a cycle chart and the way this software works, it looks across cycles. This is one of the reasons why I use it. So it uses 5-day, 10-day, 20-day, 40-day, 80-day, 24-week, 50-week, 18-month, et cetera, et cetera. It uses all of the different cycle brackets, okay? And it has a mathematical formula to sort of even them out and whatever. So, you see something like this, that's a fairly significant sign that we're in an area to turn, okay? And so that's why I've been saying, everybody, that, we're close to a turn because we're in this window. And some people are calling, oh, this is a bullish move, we're going to 2200. I don't think so. I mean, not looking at this cycle chart, okay? We could turn right here where we are, just like what we said. If we break 2105, this cycle chart supports us going lower. The next low is going to get into the 1900s. It's going to, okay? And in terms of this cycle chart showing not price, but showing the range of movement that's going to be required. And this is looking at, well, first of all, we have a low window here towards the end of June. Okay, so first of all, notice that, okay? We have another low window here towards the beginning of August. Okay, we have a nice low window here shaping up at the beginning of August. So what that is saying to me is that we could have a three-wave move. Okay, so an A wave down first into the end of June. Okay, that looks to me like the 3rd or 4th week of June, something like that, and then a bounce, and then down into the 1st or 2nd week of August, another low window. So right here, there's going to be a significant low window, and then from there, look at where we're going next, which is up here. Okay, so by November or the end of the year, roughly speaking, we're going to be back at the we're going to be back at the highs. Okay, so that's what the cycle charts are saying. Okay, the cycle charts are saying that there's a dip coming. Okay, and so if you look at the green line, the green dip is centered on. This is saying July 29th. Okay, that's what it's saying. But this could be anywhere from July 29th into the 1st or 2nd week of August. Okay, so that's cycle charts. That's the Dow. That's how I'm seeing it right now.
Do you want to throw me the chart back? Because I'll show you what that the obvious topping pattern that is forming that could deliver that retracement.
Absolutely.
Where it might go. So pass it over.
Yep, sure.
And cover that.
Yep.
Right. On here, I'll show on the weekly chart what this. No, sorry, I'll show it on the daily chart. This is the potential major double top that probably isn't forming here, but could be forming here. And this is why I'd like to see a new high made before we retrace, because that leaves the possibility that's the end of wave 5. I don't know whether it's a probability. We'll see, but it's possible at that stage we'd have a major topping pattern which would obviously head down. So that actually would be a pretty good match with the stats for the year, which are bearish. Very bearish. It's having said that, I don't have that many years where I've had 2 of these in a row. I think this might be the first one actually. So it might be that having this same very bearish annual stat last year might mean it's less likely to make target this year. We'll see. Anyway, having a look at this, this is the pattern we've got here. This could be a double top, and even if this gets up to 2140, that would be fine. If you got up to 2160, that's probably more likely to be a head and shoulder pattern. But if we went up to, let's say, 2135, 2138 and failed, and this broke down from here, this would be a double top with a target, with alternate targets. The first one would be in the 1940 area, and the other one would be in the 1910 area, I think. Might be as low as 1900. But this is the potential pattern, and the support level for that would be at 2025. But that's the potential topping pattern we're looking at here. And if we go into the low 1900s, then this is the way we would do it.
Okay, sounds good.
All right.
Okay, I think that's the end of the questions. And so, Jack, I think that's a wrap. We've been on for a little more than a half hour, 40 minutes or so. If there are no other questions, guys, I think that's a wrap, and I think that's the case. So thank you, Jack, as always. Always a pleasure.
Pleasure as always, mate.
Yeah, same here. Everybody, thank you very much for the questions. Great session. Take care. Bye-bye.